President Trump is confident about the country's economic performance, but will investors agree as 2019 wears on? Joining us now, Douglas Holtz-Eakin, president of the American Action Forum. He's the former economic policy director for John McCain's presidential election. He was also chief economist for the Council of Economic Advisors and a director of the Congressional Budget Office. Also with us, Jared Bernstein, former chief economist and economic policy advisor to Vice President Joe Biden. He's now at the Center on Budget and Policy Priorities and is also a CNBC contributor. Gentlemen, thanks so much for joining us the day after July 4th. We do appreciate it. Doug, I'm going to start it off with you. It seems like there's a lot of time between now and the 2020 election in terms of where the economy could go. So what is the message right now that the president obviously says this is the strongest the country has been, et cetera, but, what should the message be right now?
Well, I think the economy's in good shape. There are some reasons for concern. There's no question it was going to slow down during 2019, and it has. And the question is to what? Are we going to go back to a trend growth rate that looks like a little under 2%, or down to something that looks closer to 2.5%? The latter would be an enormous success, and I think that's the key question. This year, I think we started off kind of poorly. The household sector wobbled in the first quarter. It was quite surprising given the low unemployment and the wage growth we've seen. Seems to have stabilized more recently at about 3% growth. So that leaves it up to the business community. And as you know from watching the markets every day, the business community has a lot of concerns about the outlook, and their performance during 2019 is going to dictate the momentum going into the election.
Is the Fed, Doug, before I get to Jared, is the Fed sort of I don't want to say a running partner for the president, but I mean, is the Fed going to be a major determinant in terms of whether or not the president gets reelected?
He doesn't think so.
Well, obviously, he doesn't like, Jerome Powell, but in terms of what the Fed does, could that be a major factor?
I think the Fed is in a good place. I think the hype around this has been vastly overrated. Talk of a 50 basis cut just makes no sense to me. They're going to keep an eye on the underlying core fundamentals. They are in pretty good shape, not perfect. Inflation continues to run low. That might give them a bias toward easing. I don't think he has any concerns about the Fed. I think it's the quality of the remainder of policy. And the trade policy on balance has been a negative. That's the one that he controls in the near term. It's the one you should think hard about.
Jared, how did the Democrats run against this economy and the stock market, which is, of course, close to at record highs right now?
Well, the stock market's an easy one for Democrats because they're going to stress that the bottom half of households, which is where more of their base resides, holds little or no stock at all. And, of course, the booming stock market is, from many Democrats' perspective, a symptom of inequality if you look at how concentrated stock wealth is among those at the very top of the income scale. But I think that for the Democrats, the issues are very much what Doug teed up in terms of the economy. It's hard to imagine that the unemployment rate won't be quite low by the time the next election rolls around, but it's going to be all about the deltas, meaning the changes in some of these key variables. So if GDP growth downshifts, and Doug is right there in the center of the forecast, if the downshift is 3 or even north of 3 to something around 2%, which is a pretty common forecast, I'd actually say it's about the median one. That's probably going to put some upward pressure on the unemployment rate. So it will be low, but it could be rising by the end of 2020.
Fortunately, we have another economist here on set. So, Joe, where do you see the GDP number being around 2020?
A lot depends, Melissa, on what happens this year with the Fed. I think the Fed basically is the straw that stirs the drink. Central banks have been dominant. I hear what Doug said. The economy is slowing, and I agree with Jared as well. We're slowing from 3-something to 2-something, maybe a bit less, but it's a long way between now and next year. Historically, though, I can say that Ray Fair at Yale, a very well-known econometrician, said that Q2 GDP is statistically the most important during an election year. So that means late July next year. If the economy, in any quarter, GDP could be whatever it wants. But I think the economy is going to be okay next year, especially if the Fed cuts aggressively, as I expect. It's going to stabilize things for a period of time. And we get a trade deal, which psychologically will give the market a lift. And we might be able to juice things for a few quarters and carry us through 2020.
Doug, if you had to write how this is all going to play out in terms of when we get the trade deal, how many times the Fed cuts interest rates, et cetera, up to the 2020 election, what would be the ideal scenario in your view?
Well, I think the thing that's not on that list that should be is to get a budget deal. The real threat coming this fall is the fact that they have to raise or suspend the debt ceiling, and they have to come to some agreement on how to fund the government and at what levels. If they go on autopilot and fail to get a deal, that's a $130 billion cut in spending, big negative headwind on the fiscal policy front. So that's something that really needs to be avoided. White House should be all over that. I think the Fed's going to have one rate cut between now and the election. And honestly, I don't think there's a real trade deal to be had with China. I think this strategy has always been doomed to fail. But they need a face-saving deal that gets them out of open warfare, and I hope they get it soon.
Can the president win under all those circumstances? One rate cut, not a real trade deal, et cetera?
I think the president can. If he wins, it will be just as close as last time, almost inevitably, even in a strong economy. If you look at the numbers, his path to victory is always quite tight.
Yeah, can I just wanted to say, spoken like a true former CBO director, Doug very appropriately brings in the fiscal story. I actually think the downshift in GDP from 3 to 2 something that I think we're in the midst of right now is largely a function of the fiscal fade. Yes, trade uncertainty is in there, and it's almost certainly shaving some number of basis points off of GDP growth. But the big story is the fade in deficit finance spending and tax cuts. That by itself is probably shaving something like 75 basis points off of GDP over, say, 2019 second half through 2020 first half.